I think the current valuation is very compelling. I don't think one needs to even understand what they would do with Reality Labs and all of that. I think make a simple bet to double your money in 2 or 3 years. I think that's a pretty low risk bet. There's no guarantees in this world, but I think there's a good chance you can get a double in 2 or 3 years or less. And then in the meantime, you get the popcorn, watch the movie, put a lot of butter in the popcorn. And if there's things starting to pop, you can say, okay, I'll stay on for 2-3 more years and see if I can get another double.
Stocks of Facebook parent company Meta took a nosedive since investors were bitterly disappointed by its fourth quarter earnings. During the first week of February, $250 billion were wiped out from Meta's market capitalization, putting it on track for the biggest one-day valuation drop in US history. CEO Mark Zuckerberg said Facebook was facing increasing competition from rivals such as TikTok. So, is it the right time to accumulate the Meta stock? This question was answered by Mohnish Pabrai in a recent interview with Divya Narendra, where he gave his expert opinion on the way he would play his cards and leverage the current drop in price of Meta. As value investors, we are always interested in the cash flow from operations, and Facebook generates most of its cash flow from the ads business. Now, Mark Zuckerberg admits that he is facing tough competition from rivals like TikTok that are exploding in popularity. It means that the competitive landscape is evolving rapidly, and Facebook has to now innovate and find new ways of generating cash flow. I have mentioned the link of the hour-long video of the interview in the description. I strongly recommend that you watch it. But in this video, I have shortlisted some key points from the interview which reveals the way Divya Narendra and Mohnish Pabrai look at the things from various perspectives. So let's start off with the most viral clip from their interview, where he mentions that the Meta stock could easily double in price in coming 2 to 3 years.
One approach investor could take is they could buy the stock. They could hold it for 2 or 3 years, right? So one is you get to see whether you get your double or not, which is fine. You got that. And you also get to see what the execution is on everything else in the next 2 or 3 years. So
100%.
So what I'm saying is you go 3 years out, 2025. Now your stock is sitting at 2x the price you bought it at. And you can say, okay, what happened in the last 3 years in terms of traction or tangible, advances that give me more comfort than where I was 3 years ago, right? So investors could take an approach like that, which they'll say, okay, let's do a look-see in 3 years, whether 30 billion went into or 40 billion is going to Meta now by that time. What is coming out the other end that is tangible? And there may not be much by then either. But at that point, at least they can make a better decision on a go, no go, right? How do you think about that? What do you think? So let's say what I'm asking you, if you own Meta, the price has doubled in 3 years, and what would you be looking for from them on these new initiatives to give you more comfort? What would you expect them to be? Where would you expect them?
I think the big point here is that you don't need to believe in the metaverse to own the stock, because the core business is trading at such a huge discount to the market that you can own it at, I mean, as you said, like we're talking about, something approaching 10 times earnings, like that's crazy.
I have never seen Mohnish Pabrai so much excited about a stock. Therefore, according to Mohnish Pabrai, with the current market cap of just $560 billion and the PE ratio hovering around 10, if we only buy the stock with the ads business in mind and neglect all other initiatives of Meta, it can double the money of investors in just coming 2 to 3 years. It is good to know that Mohnish Pabrai views the Facebook push towards metaverse as a bet which might not work out. Therefore, as a value investor, this side of the business is not something which he would consider while paying for the Meta stock, or let's say calculating its intrinsic value. In short, while buying the Meta stock, Mohnish Pabrai won't think about the new metaverse initiative and focus his evaluation on the ads business alone. In other words, according to Mohnish Pabrai, the metaverse initiative might not create enormous impact in coming 2 to 3 years, and he is fine with that. Divya Narendra has a different opinion. The first thing which Mohnish Pabrai mentioned was the form factor.
Google Glass, I thought, was a revolutionary product, a big leap forward, very strong technology, and almost, I think it was. So I think when you get to the ergonomics and what users are looking for, if things are even slightly off, they won't work. And I think that was the case with Google Glass. It was slightly off. Whereas something like iPhone has been right on. Now the iPhone itself, I feel, is extremely kludgy. So if I'm walking around using Google Maps on an iPhone and I'm looking at my phone and trying to see where I'm going, that is a really bad interface. The human factors for that is terrible. So it's a great device to listen to music. It's a great device to interact, chat, whole bunch of things. But eventually, the device will change. I know it will change, and Meta is trying to go in that direction. The problem is that I believe the revolution is going to come out of some guys in a garage. I don't believe it'll come out of inside Facebook.
So Mohnish Pabrai thinks that hardware is the biggest hurdle in the adoption of metaverse, just like Elon Musk stated. He also thinks that the chances of a radical innovation emerging out of Facebook that will obliterate this barrier are very slim. In other words, a new device that will take metaverse to masses will most likely come out of garage, in his opinion. Apple was born out of a garage too. And Elon Musk also started his journey from a small room with his brother. But Divya Narendra has an entirely different opinion. So by the way, just if you don't know, Divya Narendra was a part of the Harvard Connection team, which was the project from which Mark Zuckerberg got the inspiration of Facebook.com. So he is definitely someone whose opinions are valuable. So let's listen to the opinion of Divya Narendra about Meta.
Could like a Twitter or any of these companies, like, do they have the firepower to develop the tech? And we're talking about sound, haptics, obviously the 3D kind of immersive experience into a form factor that's small enough to be adopted by, hundreds of millions of people or billions of people. That's really hard. And I think what people maybe underappreciate about Meta as a business is that their whole MO is used by a billion or more people. Right. And so that applies to what they're doing with Quest. It applies to what they're doing with Ray-Ban stories. The form factor was a huge problem for Google Glass. Like, that's one of the main reasons it failed. Obviously, the technology was worse back then. But when you think about what V2, V3, V4 of AR glasses is going to be, and when you think that these glasses are in a form factor that is already iconic, right? So, when they partnered with Ray-Ban or Luxottica, they implanted all of this tech into the Wayfarer, which is the most iconic form factor of any sunglass in the history of sunglasses. So you're not sacrificing aesthetics when you purchase that product. Now they have a project called Project Nazare, which is going to be kind of the next iteration of AR glasses, and you just kind of think through, okay, in a couple of years, like what that next version of that product is going to look like, and then you think about like who's in a position to develop that. Like, it's not that many people, right? I mean, they spent over $10 billion last year on all these hardware initiatives, kind of lumping in VR, AR, everything in Reality Labs. Like, how many companies are in a position to do that and still have 35 to 40% operating margins on a consolidated basis? Like, not that many.
Therefore, Divya Narendra thinks that the development of devices with the right form factor will be very capital intensive, and very few companies can afford such a huge R&D budget. Facebook is spending billions of dollars to become the market leader in this exciting new space. So Divya Narendra thinks that the chances of Facebook leading this market are huge, and the gadgets like Google Glass did not provide the users with great experience. They were clunky, so that initiative ended in a failure. On the other hand, for example, the Facebook Ray-Ban glasses look just like Ray-Ban glasses. Therefore, they might actually get traction in the market. And this is just the beginning of the journey for Facebook. So 5 or 10 years down the line, these products will evolve further to a point where they will most likely get mass adoption and create enormous cash flow for Meta. So yes, of course, the market has not yet seen a product with an appropriate price point, right value proposition, and end user experience. But with time and learning curve, Meta will most likely get there, as per the opinion of Divya Narendra. So Facebook is is the only company in the top 10 tech giants which is investing heavily in the AI and VR space. But it is absolutely true that it is a big bet for Meta, and only time will tell what happens in the future. And that is why Mohnish Pabrai likes other tech giants like Amazon as far as their strategy to create new innovations is concerned. This is what he said in his interview.
When I look at a business like Amazon, and actually if I look at the large Chinese tech and the large US tech, so we look at Facebook, Alphabet, Amazon, Microsoft, Tencent, and Alibaba. Let's say we looked at these characters. There are only two of these players, in my opinion, that's Amazon and Tencent, that are really off the charts on capital allocation. So if you look at Amazon, for example, and you look at their balance sheet, they have no cash. They actually have net debt. And the Bezos approach, and on the other hand, Amazon is an extremely innovative company. They've gone after one vertical after another and killed it. And the way Amazon does it is they don't make one large bet. They did not bet everything on AWS. AWS was a small Mickey Mouse, project on the side. And as it started to get traction, they started to put more resources behind it. And they try to keep it under the covers for a long time. But if you look at, like, for example, the Fire phone, for example, it failed. But Amazon maybe put 100, 200 million behind it. Pragmatically, they saw, okay, this is not working. We're going to move on. And they have a lot of failures. But I don't know of any Amazon failure that absorbed meaningful amounts of capital relative to their scale. So they are continuously and all the time going into, so for example, very soon they will start competing directly with FedEx and UPS, offering package services for non-Amazon stuff. Anything I want to send to anywhere, I can use Amazon instead of UPS and FedEx, and they'll kill the pricing on that, which will be really hard for those two players. That's the example of how they're innovating. Tencent is a little bit different in the sense that they are really good at understanding that they have limited competencies internally. Their venture and investing arm is off the charts. It's at the level of Sequoia or Andreessen Horowitz, at those guys. I mean, their long-term returns on their outside investments have been 36% annual compounded returns. It's amazing returns. And they've done it globally, and they've done it at scale. And on the internal projects that they put their money on, they're really not willing to make these $10 billion bets. I mean, when they did WeChat, it was a small 20% team on the side ranking it out. So what I find is that an investment in Tencent gives you a Sequoia-like venture arm, which is very proven and scalable. And it doesn't matter what the Chinese do. So if the Chinese Communist Party gives them all kinds of, roadblocks, they'll just they've already moved their engine to go outside China and just go kick ass outside China. And in the case of Amazon, the innovation engine is just so extreme. I mean, the way he enters new geography. So if I look at someone like Microsoft, they don't have a place to put the capital. Their balance sheet is drowning in cash. So buybacks, and that's pretty much the end of the story. There's nothing else they can do. Alphabet, similar situation. They've got a few plays. They've got a lot of cash coming in, but they don't have an investment engine that is really serious. And they don't have internal projects which have discipline. I mean, if you look at what they spent on Waymo, that's been just a pipe dream for a very long time, with nothing coming out the other end for a very long time. When I look at Facebook particularly, Meta is going all in on one bet, which is the exact opposite of what Bezos does. Bezos never went all in on one bet. He only went all in one bet right at the beginning on books, and then very quickly started diversifying those bets and went from there. So from my point of view, I cannot give credit to Meta to take VR mainstream. The gamers will go for it. The early adopters will go for it. A lot of cool factors on that front. But for them to go from that 10 million to 1 billion devices. That is a massive leap, very big leap. And we don't. So what I'm trying to say is that all I can do is I can say, okay, I know it's cheap. I know I can get my double. I know getting my double is low risk. But then let me go 2-3 years and let me see what they've delivered. Has the 10 million number moved to 100 million? What are the next versions looking like? Are the non-gamers buying this? Is, the housewife next door, is she buying it?
So according to Mohnish Pabrai, as a value investor, he will only base his evaluation on the ads business of Facebook and will be conservative in his approach, since unlike other companies, Facebook is going all in on metaverse. Unlike Amazon, which tries different ideas with small capital allocation as compared to its scale and allocates more capital down the line when these ideas and innovations show some promise, Facebook has gone all in and put billions into this one bet, just like it did with its ads business. And surely the metaverse side of business might fail in the same way as most startups fail. Therefore, for Mohnish Pabrai, the only business under Meta on which he bases his evaluation is the ads business. And if the intrinsic value of Meta stock is calculated based on Facebook's ads business alone, the stock is very undervalued currently, so it represents a good buying opportunity. While the Reality Labs will be an expense that will be taken into account when calculating the intrinsic value of the stock. And right now, even with this approach, the stock is very cheap, as I just mentioned, and can double our money in the coming 2 to 3 years. Here is what Mohnish Pabrai said. Let's take a listen.
I think Meta is in a place where it can attract a very different set of investors. Who would have never looked at the stock in the past. I think the current valuation is very compelling. I don't think one needs to even understand what they would do with Reality Labs and all of that. I think make a simple bet to double your money in 2 or 3 years. I think that's a pretty low risk bet. There's no guarantees in this world, but I think there's a good chance you can get a double in 2 or 3 years or less. And then in the meantime, you get the popcorn, watch the movie, put a lot of butter in the popcorn. And if there's things starting to pop, you can say, okay, I'll stay on for 2-3 more years and see if I can get another double.
Now, if the Reality Labs expense pays off after 5 or 10 years, that is fine. But if not, it is also fine, since the ads business alone will double the price of the stock in coming 2 to 3 years. And if things start to go in the right direction with their metaverse initiative, then it would be even better. And in that case, the stock price could go up to 4x or 5x or even higher. So irrespective of whether the metaverse business becomes a success or not, Mohnish Pabrai is taking a conservative approach by completely neglecting the potential of its metaverse initiative. If Facebook makes a success out of metaverse, and if it can come up with a groundbreaking product that will get mass adoption, it would be an extra bonus for him. So these were the thoughts of Mohnish Pabrai on the Facebook's metaverse initiative and his strategy for acquiring the Meta stocks. I hope that you found this video interesting. Let me know in the comments below, would you like me to make such videos in the future? If you found this video useful, please don't forget to smash the like button for the YouTube algorithm and consider subscribing. That would mean world to me. Thank you so much for watching. I really appreciate it. You all are awesome, and I will see you guys in the next video.